Can you save stamp duty land tax when you are buying a property? Yes, actually. Check out this video as Louise and I talk about that very subject. Darshan.
Hi,
I recognise
Darshan.
Darshan actually. Hi Darshan, hopefully you're well. So he's got property in personal names. This is the seller. This is a really fascinating kind of scenario. So what he's got is that there's a seller who is got commercial property, I believe it was, but he's got property anyway, and it's in their names. Okay, so he wants to buy this property portfolio.
So the seller's owning it personally.
So he owns it personally. And what Darshan is saying is, well, could we get them to incorporate it so that he can buy the limited company? Darshan can buy the company.
Great idea.
And we'll come on to that first. And then basically save on tax. Now, here's the thing. I want you to think about this. Picture the scene, guys. I want you to see a house in front of you. To be fair, I don't want you to go outside. That'd be ridiculous. You're talking to us right now. But you picture a scene that you're going to buy a house and you're thinking about taxes. To be honest, it's not the thing you would do. But, let's try and imagine that's what you do. Well, enough said.
Sorry.
So buying a house, you've got stamp duty land tax to pay.
Woohoo.
Right. So that can be quite high. You got the Rishi Sunak holiday period. That's nice, but that's gone away or going away. So you got stamp duty land tax, and that's pretty much it. Now, the big thing about that is if you are buying a big portfolio or a property portfolio, you've got two levels of SDLT. You've got the residential rates plus the 3%. Let's not forget that.
Sure.
And if you're foreign, 2%.
Happy days.
So there's five SDLT tax there, isn't there? So you got this SDLT total tax charge if you buy the property. But as Darshan is kind of beautifully asked a question and poised it for us to answer, was if you buy the limited company, what's the stamp duty land tax, or in fact stamp duty, forget, on buying a limited company with the shares, and what's the value based on?
Well, I'll let you do the value based on, but
okay.
What I'm going to talk about is, so Simon's just kind of brought to life the residential stamp duty land tax rate. So it starts at a minimum of 5% if you're buying a second property or it's a rental, and you're overseas, plus whatever the standard rate of SDLT is, and that can go up massively, can't it? We all know. Joy. Stamp duty, as it's described when you're buying shares in a company, is a, brace yourselves, people, brace yourselves, is a whopping 0.5%, rounded up to the nearest £5. It's that last £5 that really gets you.
It really does. Well, to be fair, Hugo always asks for that £5 if he sees it.
He does. That's our son.
So was that it? You're going to
I'm
say?
done.
Okay. So stamp duty land tax is based on the property value. So if you've got a property that you're buying for £100,000, hey, guess what? You are going to be paying stamp duty land tax on that 100,000. And I'm talking about the 3% and the 2% in particular. But if you buy the limited company, you're not basing stamp duty of buying shares on the £100,000.
Why not?
No.
What are you basing it on, Simon?
Well, I'm not telling you that. You're basing it on the net asset value. So you're taking the £100,000, and if that property in the limited company has got a mortgage of 75,000, which is quite typical, then the net asset value is £25,000. You are paying stamp duty at the 0.5% on that 25,000. So the stamp duty land tax saving is significant, and that's why Darshan has asked, could this happen? Now, Darshan, I have to be honest with you, when we're talking about someone else's tax, and everyone listening as well, look, you can talk to people about what you've seen, and you can certainly share them to say, watch this video, it's useful, or give them the article, or whatever it might be, wherever you see useful information. This channel. But this, you can share the links, but I wouldn't be tax advisors. And what I mean by that is, don't say to someone else, I've seen this, I think you should do this. Because we have the role reversal whereby someone says to me, or not to me so much, but the tax team in your team, hey, I've seen this on Facebook, and therefore it must be true. And you kind of think, But are they talking about their own specific situation and then try and give you tax planning based on their needs, wants, requirements, as opposed to really understanding what yours are. And Darshan, I would say just be careful of that, because if you give advice to someone and it goes wrong, they turn to you, and that's the problem with it. So should they incorporate? Big question. I mean, that's huge. And I think in terms of trying to answer that question, even on this show, would be near on a possibility, even if we tried to do it in an hour. So I'm going to have to just, unfortunately, give that one up. But it's a great one that you talked about, Darshan, but maybe get them to book a one-off tax consultation, paid for, because they're not a client of ours, clearly. But you know, it could certainly worth be talked about. Any closing comments on that one?
I don't think so. I other than, you know, explore options, get them to open their mindset to ideas.
Open your mind.
Thank you.
Sorry.
Open your own mindset to different ideas as well, because there might be solutions of deals on the table of things you want to sell yourself that you hadn't thought about before because of it. But everybody's situation is slightly different, and you really do need to have those people go away and be satisfied they've really checked it out for them, for their own peace of mind and tax consequences. Because whilst it might look a cracking way of doing it for you, it could be absolutely a massive tax death knell for them.
Please be note that we have a couple of events that we think you should register. The first one is the Property Expert Panel. And on that panel member list, we have a mortgage broker, a property mentor, a tax advisor, which you would have guessed it is us, the NRLA, LMPG, and a surveyor. So make sure that you ask your property investment and your property development questions to our panel members on the first Monday of every month. The link will be appearing below this video. Make sure you also list for the Property and Business Tax Live Q&A with Louise Mishevich and Simon Mishevich, the co-owners of Optimize Accountants. You can ask them any question you would like live on our stream, and that is on the third Monday of every month. Again, the link will be appearing below this video.